Hello and welcome to another Smaulgld live stream. Today is June 21st, 2018. Let's take a look first. The title of tonight's episode is going to be, What do Russia's gold purchases and Treasury dumps mean for the dollar? We attempted to get to it last night and we got sidetracked on a few other issues. So tonight we're going to focus on what do Russia's gold purchases and Treasury dumps mean for the dollar. In the meantime, let's take a look at what happened during the day in the gold and silver markets. They were basically flat. Gold is at $12.67 and silver is at $16.30. Pretty much no movement at all today. The stock markets were also down. The Dow falling nearly 200 points. NASDAQ down 68 points and the S&P down 17 points. The dollar index was up for a while, but it fell back down to 94.85. It had one point topped 95.40. Other thing that happened today, there was a Supreme Court decision on internet tax. Now, many of you may not know this, but when you buy something online, let's say you're in a town or a city or a state that charges sales tax when you go to the store. However, if you buy something online and the merchant doesn't charge you sales tax, you figure you've made out you haven't paid sales tax. However, nearly all states have a thing called use tax, which requires you to pay sales tax on the goods and services that you may have purchased online out of state. And today, the Supreme Court held that a South Dakota statute that had required large retailers or e-tailers to collect tax was considered legitimate by the Supreme Court. Now, up until today, the Supreme Court had held that in order for a state to try to charge income tax to out-of-state entities, they had to have had a physical presence in the state. And they deemed today that that's somewhat outdated, if not totally outdated, because you don't have to have your warehouses or anything in the state in order to send goods into the state. So they determined in South Dakota's case with its statute that if a company was sending in $100,000 worth of goods in a single year, had over 200 transactions in a year, then it was legitimate for or reasonable for the state to be able to try to charge or try to make those online online e-tailers collect tax from their customers in South Dakota. The other thing that I noticed when I was just quickly looking around is they mentioned that this is not new. It's the idea that they're making the retailer from out of state collect the tax because the state's citizens already have an obligation to pay the sales tax, but we know that the majority of them do not. And most people figure, well, they get away with it because they didn't pay, and how they're going to find out. Well, what Connecticut is doing, Connecticut has actually contacted large retailers and asked for the names of their Connecticut customers, and they are now sending notices out to those Connecticut people and saying, look, you didn't pay the 6% or whatever tax they have in Connecticut, sales tax, since 2014, 15, and 16, and you owe X amount. You can expect to see many states go into this mode, as many states are going to be short on their state budgets, especially with respect to pensions. This is an easy way for them to go after tax money, and it's not as hard as you might imagine. A lot of people try to say, well, you don't have to pay the tax. You already have to pay the tax. It's just a matter of the state finding out about it. And if they start asking for the records of large companies like Amazon or even your favorite bullion dealers, they may turn them over and then send you a bill. So that's something to keep an eye on, especially in states like Illinois, where they have huge shortfalls in tax revenues. Illinois had tried to, in the past, pass a law which would require Amazon to collect sales tax, and I think it was called the Main Street Fairness Act. And the idea there is that not only does the state lose the tax revenue, but the local companies with storefronts lose too because they have to collect the tax, and they lose customers to people that buy online and think they don't have to pay the tax. So look for this ruling to have not immediate impact, but for a lot of the states to try to now pass legislation that would require online merchants to charge tax as a way of getting more tax revenue, and also look to them, irrespective of this ruling, for them to try to go back over the last few years and collect tax from people who haven't paid the sales tax, but that they've identified have made purchases and had the goods shipped into their states. Okay, let's get into what, and I'm going to handle the questions again today, but I'm not going to get off on, last night we were talking about what is money. We had a lot of different good discussions, but we never got to the topic. So we're going to stick to the topic now. The topic is, what do Russia's gold purchases and treasury dumps mean for the dollar? Yesterday, I reported that the Russian central bank had added another 600,000 ounces of gold to her reserves. That was another 18.66 tons. Russia has been adding gold to reserves at a very serious clip. Last year, 2017, they added 224 tons. The year before, I think it was 199, and the year before that, about 208 tons. So a decent chunk of gold being added to reserves every year, basically since 2008. The Central Bank of Russia now has 1,982 tons. It's up there, or 1,942 tons, just under 2,000 tons. It's the fifth largest central bank gold hoard in the world. So what does that mean? Well, let's look at it. I don't get into hyperbole, game changer, multipolar world, end of dollar hegemony. It really means none of that. What it means is that Russia, unfortunately for it, has been subject to sanctions since 2013 and 14. And also, the ruble has really been a troubled currency. Now, it's surprising that it's so troubled, given that it's probably, you can consider it oil-backed and gold-backed, because the Russian economy is based largely on oil. It's a large oil exporter. It's one of the largest oil producers in the world. And it now has 18% of its reserves in gold. So you would think that the ruble would do well, but it really hasn't done well on the international stage. No countries hold it really as a reserve asset. So what's happened with Russian gold? Well, it's now worth about $80 billion. And the reason I say it's not that big of a deal is because $80 billion in global finance is literally nothing. And from Russia's perspective, it makes sense for them to they're not just buying gold on the open market. That would be more significant, but not that significant, because adding 18 tons a month is a big deal, but it's not that much gold either in terms of dollars. They only own $80 billion worth of gold, or in terms of the total global supply. So they don't really have that much gold at all. And it's not that much, just to put it in perspective. $80 billion, there were months when the U.S. Fed printed more than $80 billion in QE. So it makes sense for Russia to do this, to add gold to reserves, because they're also a major gold producer. Now, if you had rubles, and the ruble was depreciating, and you had the second largest gold mining production in the world, it would make total sense for them to mine the gold and then exchange their rubles directly for their domestic mining production and dump it into the central bank's reserves. And that's basically what they've done over the past few years. They've converted their rubles to gold, their rubles into gold. The remaining gold they ship to China, and they just entered into an agreement this year. I mean, they mine about 350 tons of gold a year. As I mentioned, they're adding about 220 tons of gold a year of that supply into the central bank. And then the rest they sell for cash, and they get that from China. And this year they made an arrangement to also sell some of their gold to India. Remember, India relies solely on imports of gold to meet their supply, other than the secondary supply that they already have in the country. They've got like 22,000 tons in the country. So Russia has been converting a lot of their domestic mining supply into gold. It does take some of the world's global supply, obviously, off the market if Russia is keeping it in-house, and that means there's none of their production really available for the rest of the world if the rest of it goes to China. However, the world mines 2,600 tons of gold a year, and Russia mines 300 or so, and basically keeps most of it and sends some of it to China. And their total amount of gold, their 1,942 tons, is only worth $80 billion. So when people get all excited that Russia's doing this and Russia's doing that, Russia's doing what makes sense for Russia. But to interpret that into some type of game over for the dollar, end of dollar hegemony, doesn't look at the full picture. Now let's look at, what about their dumping treasuries? They're dumping treasuries. What does all that mean? Well, first of all, Russia has never had large amounts of treasuries. Over the last 5 years, I think they peaked at about $160 billion in treasuries. And $160 billion in treasuries, that's less than 1 month of QE3. At the end of, I think it was 2013 or 14, I'm doing all this from memory, but I'm pretty sure this is right, Russia did start to dump treasuries in response to the first round of sanctions related to Syria around the time of the Olympics, the Winter Olympics. Russia then stopped dumping treasuries. I think they got as low as 60 billion, and then they rebuilt them back up as part of an overall strategy that even though they were under sanctions, they wanted their central bank to be strong, so they wanted to build the reserves. So part of that rebuilding of reserves involved adding gold, which was a no-brainer given that they didn't want to add Russian rubles to the reserves. That wasn't going to help them, so they converted those into gold. And pretty much the rest of it, they built back up their U.S. Treasury position. And then they got hit with sanctions again, but they pretty much grinned and bared it, and they were around 80, 90 billion in treasuries. And then during the first year of the Trump administration, 2017, they brought those reserves, U.S. Treasuries, up over 100 billion. Now, during the entire year 2017, the narrative was still there, dumping treasuries, which wasn't true. During the entire year of 2017, China, Russia, most of the world were adding treasuries. They were not dumping them, but once you get on autopilot and there's a certain narrative, you just repeat it. But I was looking at the numbers month to month. I have them on the website. Russia was adding treasuries. Now, Russia adding treasuries was surprising, given that the idea behind the reason countries supposedly hold treasuries is because they need those treasuries to buy oil under the petrodollar arrangements from Saudi Arabia. Well, Russia has no such need to buy oil from Saudi Arabia. They sell oil. Second of all, Russia has no need to have dollars because it has no trade with the United States, so it doesn't even make sense for it to have any U.S. treasuries, especially when the U.S. then has inspired the rest of the Western world to put sanctions on them. So the fact that Russia had any treasuries at all was a big deal. Now, Russia did finally, quote, dump treasuries in April. They had about $98.6 or $98.1 billion worth of treasuries in March. And in April, the U.S. Treasury reported that Russia's treasury holdings went down to about 48.1 or 48.6, something like that. It was a $47 billion drop. It was almost half of their treasuries. It truly was a dump. But $47 billion worth of treasuries is really insignificant. And the fact that they now have very few treasuries, only $48 billion left, if they were able to dump $47 billion in April and no one even knew about it, they just reported on it a few days ago, the U.S. Treasury, well, they can go ahead. They could have already dumped the other $47 billion, and it won't make a stitch of difference. Now, that also doesn't mean that Russia is dumping dollars. It just means it's dumping its treasuries. The Russian central bank Elvira, I can't pronounce her last name, mentioned that 45% of the reserves are still in dollars. They just don't have them in treasuries. Now, half, less than half, that's a good, quote, de-dollarization. But what do you expect out of Russia? Why should they hold any dollars when they're basically being sanctioned and they have the ability to add gold, and 20%, less than 20% of their reserves are now in gold. So, what does it mean for the gold market? As I mentioned, pretty much nothing. It's good for Russia that Russia has that gold. But as far as holding a significant slug of the world's gold, they don't. I mean, 1,800 tons is nice to have, 1,900 tons, but it's less than annual global mining production. The fact that they add about 200 tons a year, still, it's less than 10% of global mining production. So it doesn't mean that much, but when people like to make a big deal out of it, it's really, if you look at it objectively, it's what Russia probably should be doing. It makes sense for them to do it, but the impact on the gold market isn't that significant, and the impact on the dollar, they're dumping treasuries, is 100% insignificant. And Russia is probably knows that it doesn't have a weapon. It's not like if it dumps its treasuries, it can dump the remaining 47. They have less now than they dumped about the same amount in April that they have left now. So if it didn't do anything in April, they can dump the rest of it today. They could have already dumped it. It really doesn't matter. However, they're not probably going to bring their treasury reserves down to zero, because part of just prudent central bank management means you have to hold. You don't have to, but all central banks do hold a certain amount of treasuries because they do need them to conduct trade. Now, maybe they figure they're not trading with any of the Western countries, but they are. They're not like Iran, where they're totally sanctioned. So we'll see what happens with Russia and gold, but I don't make a big deal out of it. I report on it every month. I report on the treasury positions, but I don't infer this big game changer, end of dollar hegemony, and multipolar world. It's not the case. Now, some people then move over to China, and they say China is doing the same. China and Russia are two entirely, completely different types of economies, completely different types of mentalities. China is running on debt, has been running on debt for years. Everything it produces is debt driven, and it's designed to make it into a industrial type of economy. They took about 300 million people, maybe more, from the country, moved them into the cities, gave them manufacturing jobs. They are reliant on issuing debt, having state-owned banks lend money to state-owned enterprises, and those state-owned enterprises don't necessarily have to turn a profit. They have to create GDP growth and jobs. That's why you hear these ghost cities, whatever it is. So they don't have to, and they're not based on profit. That's why they've moved into the Belt and Road Initiative. They need to expand. They have to continue to grow. Otherwise, they can't keep the standard of living. They can't keep the populace happy. So they have to continue borrowing money in order to grow, and that's their mission. And they'll have bad debt. They'll hide bad debt. They don't care. The central bank sold $1 trillion worth of reserves. Some of that was treasuries, but they haven't added gold since 2016, October, which coincidentally was the month in which the Chinese yuan entered the IMF's special drawing rights. Now, there may be a lot of gold in China. China also is the world's #1 gold producer, so they have a big impact on the gold market in that they produce 450 tons of gold, and they keep all of it. They also import large amounts of gold. So China is a much bigger player in terms of gold than Russia is, but the People's Bank of China is not adding gold. The people of China are adding gold. Sovereign wealth funds are adding gold. State-owned banks are probably adding gold. People's Bank of China subsidiary, direct and indirect subsidiaries are probably adding gold. But as far as the People's Bank of China, it itself is probably not adding gold. Now, as to China dumping treasuries, Well, Chinese treasuries, here's another difference between the Chinese economy and the Russian economy. The Russian economy is not based on the dollar. The only reason they hold dollar reserves is just what they think is prudent central bank management, whether they hold them in dollars or U.S. Treasury. They don't need dollars. They don't use dollars. They just have dollars. China's state-owned banks issue dollar-denominated debt. The Chinese government, central bank, owns $1.1 trillion in U.S. Treasuries and probably even more dollars. The Chinese economy is intricately linked with the dollar. It's not, Russia could indeed walk away from the dollar, but Russia walking away from the dollar means that the country with the 12th or 13th largest GDP walks away from the dollar. It's like if South Korea did that. Would be a good thing, but they kind of already are away from the dollar. They trade with Iran. They trade with other countries that the U.S. doesn't. And China is not in that position. China can't just say, other than to satisfy some fantasy, that they're going to dump all of their treasuries and be done with the United States. They can't. Not their entire, but a good portion of their central planning involves selling cheap goods to the United States. That keeps those people that have those jobs, that they may even be subsidized so that they can make cheap goods. That's calculated into their centrally planned economy. Whereas Russia doesn't have any phony economy that they have to prop up. In fact, if you look at Russia, during sanctions, the central bank still grew its reserves. The Russian character is entirely different than a centrally planned character. The Russians undergo suffering and they just take it. And they don't have, they're not borrowing money for a consumer society. If you look at China, China has gone off on a consumer spending. The average Chinese person may be borrowing money, buying luxury goods, traveling abroad. You don't see that from Russians. Maybe in the oligarchy, but not in the rank and file. They're not on this consumer spending binge, debt-based consumer spending. There's so much Chinese consumer debt at the consumer level. Also, they're overextended in real estate, and then the government itself is well overextended. People like to talk about how the U.S. Ponzi scheme and overextended and debt. China's even worse. China's entire economy relies on that type of stimulus. And to make the point further, the Fed has actually stopped QE, has raised interest rates. The Chinese economy is still creating credit like mad. Russian economy, however, is not based on credit at all. So if you had to take bets on which economy could survive a debt collapse, it's easily Russia. China is probably going to create the debt collapse. So the other idea that we hear about Russia is that somehow the BRICS, which is a Goldman Sachs inaccurate, there is no alliance of the BRICS. You got Brazil, the B, Russia, the R, India, the I, China, the C, and South Africa, the S. Well, first of all, Brazil is a Western country. It's in the Western Hemisphere. Yes, it's resource-based, but it really has no ties in a big way to the other countries. Russia, we've talked about. We understand what the Russian economy is like. India. Now, India is closer to the United States. India has a border with China where they have disputes all the time. And so India is not really aligned with the rest of the BRICS. China, we've talked about. Now, South Africa, I don't know who they're aligned with. First of all, South Africa is relatively insignificant. They used to have geopolitical significance when they were a large gold producer and the world was on a gold standard. It was very important that South Africa, people understood what was coming out of South Africa. South Africa has got a very low GDP. It's got domestic problems. It's really of no significance. So when you talk about the BRICS, the only real challenge to the United States is the type of alliance between Russia and China, which is new in the 21st century because traditionally Russians and Chinese don't get along. This is probably the best relationships they've had, but still, they don't have identical aims, and they certainly don't have identical economies as we just spoke about. Now, the Belt and Road Initiative everybody's heard of, but I know that a lot of people probably haven't heard of the Quad. Now, what the Quad is a parallel initiative between India, United States, Japan, and Australia. As I mentioned, India is not aligned in the BRICS with China. It's more aligned with the United States, India, Japan, and Australia. Of course, India is aligned with India. India is India. Okay. What the Quad is not there to run interference with whatever the Belt and Road initiatives that China has, because China's in the Belt and Road because they're there thinking if we build it, they will come. They're going to help build out infrastructure. They're going to borrow a lot of money, and there's no guarantee that any of this stuff will pay off. So they've got deals in Pakistan, all through the east there. And again, they're just going to create credit and see what happens. The idea behind the Quad is they know that China is going to do all this stuff. They can either, if they see a good deal, they can go in and make it so that China doesn't get it, that the Quad gets it, or they can actually bail out China if China does a bad deal and it needs more funding and maybe it needs the help of the Quad, or it can actually harm China by causing them to bid higher on deals only because the Quad is there, and China may actually bid even higher to the point where it's non-economic, because China is not so much concerned about making economic deals as they are creating GDP, creating work for their people, and just keeping the Ponzi scheme going. So that's where that's how I see the Russian situation in terms of its gold and its dollar holdings. Similarly, China is certainly a big influence on the gold market. But if you think about all of the gold buying, all of the gold importing and production out of China, especially in the last 5-6 years, it hasn't impacted the gold price. Even the Shanghai Gold Exchange taking a bigger slug of the actual gold trade away from the Western exchanges, they have record high pretty much this year gold withdrawals on the Shanghai Gold Exchange. Remember, none of that gold leaves China, so it's almost like it goes into China, it goes into a black hole, and then they trade it amongst themselves, and it doesn't leave China. That was why this whole gold-backed yuan game changer was nonsense, because they were arguing, or they were convinced of this phony story that the yuan-denominated oil's futures contract, which clearly was going to happen, did happen, but that the participants in that could take the yuan and just walk over to the Shanghai Gold Exchange and exchange it for gold. That was never going to happen, didn't happen. So that's where we are. Let's take a look now at the questions. Let's see what we got here. Hi, wow, I'm up late and full of adrenaline. Gus the Broken is on every night, and he really shouldn't be. He should be sleeping. He is coming to us from the Netherlands. I'm on the war oath tonight. Nothing new about that. Okay, dumping and pumping, keeping us busy. Let's see. Russia's been bragging about how their economy is going, mostly weapon sales. Russia also is selling a lot of agricultural products. I remember during the Soviet era, they could not feed their own people, and they had to buy grain from the United States. They were not able to produce food, but since more free market economy, they actually are able to export, not only feed themselves from domestic wheat and things like that, but they can actually export some of it as well. So the Russian economy, last I checked, I think it's 11th or 12th in GDP. It's fairly sizable. It's not massive, and a lot of it is oil. Obama once mocked the country as saying it's a glorified gas station. That's not quite true, but it also is not a consumer-driven economy the way the United States is, with 70% of U.S. consumer GDP, of U.S. GDP coming from consumer spending. So Russia is more in line with a mining, oil production economy than it is consumer-based. Also, how they boosted the Indian economy with their tools way back, another desperate measure. That story I don't know of. Database DNA. If the price of gold was the same as the price of Bitcoin, is it your belief that it would make no difference to the financial system? Now, I'm going to have to ask you to clarify that question. Do you mean if the price of gold right now was the price of Bitcoin the way it is now? Meaning that if gold right now was $6,740, which is the price of Bitcoin. Is that what you mean? And then the question would be, why would gold be at that price? And the other question is, it's harder to figure out why Bitcoin is where it is because it's speculative, it's new, it doesn't have any history. It goes where it goes, and it can go to 1 to 20,000, and it is at 6,700 now. But it's not because the world is a dramatically different place or anything in particular happened in the world to make Bitcoin drop 60-70%. And there's nothing that really happened in the world that would make it go up 8,000% or whatever it did over the course of a year and a half. So I'm not sure whether it would make a difference to the financial system. It would depend. Gus the Broken, India is closely related to Russia economically. Russia has a foot in that door, building nuclear reactors, weaponizing the country. I'm sure there's a lot of trade going on between the countries. And just because countries are trading amongst themselves and not even using dollars, it doesn't necessarily harm the United States. I mean, there is a blessing and a curse to have the world reserve currency. People, the reason they talk about dollar collapse, death of the dollar, end of dollar hegemony, those are all code words for gold 10,000. That somehow if the dollar falls, that gold will go higher. But remember, if you live in the United States and the dollar falls, or if you're in Venezuela and gold skyrockets against the Venezuelan peso, whatever they have there, you're not really better off, especially if it's a collapse and there's nothing to buy because your economy has collapsed. So it's almost this perverse gold bug. They're cheering on like the dollar collapsing, not realizing, as we discussed last night, that the dollar has actually improved over the past 3 years because it stopped QE. It raised interest rates 6-7 times, which some of the gold pumpers said could never happen. They could never raise rates. Now they're saying they could never normalize rates. That's what I said. Oh, they could never normalize rates. But I did say they would raise rates. But compare the United States monetary policy right now. We're going to compare fiscal in a second. But monetary policy is what their central bank does. The Fed is actually prudent in comparison to the ECB, which is doing QE, has been doing QE, and is at 0% interest rates, and is expected to keep them there until the end of 2019. In contrast, the Fed isn't doing QE, hasn't done QE for years, and has raised interest rates to 1.75%. So there's a lot of room between the Fed and the ECB in that regard. And the Fed is actually, not in a big way, selling off its balance sheet. Now, if you're only looking at the United States and the Fed, and you didn't know all this about all the other countries, you'd say, well, that's a mess. The Fed's balance sheet is $4.5 trillion. They've got interest rates super low at 1.75. Yes, but it's all in comparison. Remember, the dollar index itself is just a comparison of the dollar versus the other fiat currencies. Remember, all the fiat currency issuers, including China, even Russia, they're part of the conspiracy. They know that the whole thing works on fiat dollars. China, the last thing it ever want would be to restrain itself with gold. They couldn't do the credit creation. They couldn't pump money into the yuan into the system. They couldn't do Belt and Road. They couldn't do any of the shenanigans that they're doing right now if they were somehow restrained by gold. So you have to realize all these central banks, they don't want gold. They want gold just to have a little as an anchor, but they don't want to back anything with gold. Look at Canada. Canada has no gold, and yet they have a AAA rating, sovereign rating. That's because the entire fiat system supports this nonsense with this debt creation. But the point about the United States is in the Fed, the monetary policy is better than the Bank of Japan's, which is still doing QE and has negative interest rates. It's better than the ECB, which is doing zero interest rates and QE, which is now larger in the aggregate than the Fed's 3 QEs. Bank of England is at 0, still doing QE, so the Fed is better there. And Danish bank, all these banks are doing, it's Swiss National Bank, printing francs, purposely devaluing their franc, buying U.S. shares. So the Fed is actually, in comparison, the Fed is reckless, but in comparison, it's prudent. And that's exactly what they wanted to do. They wanted to stop QE and then convince all the other central banks to make it their turn to do QE. And that's exactly what they did. The day that the Fed stopped QE was the day that Japan launched its own. And then Fed Vice Chair Fisher went over to Mario Draghi and he says, you got to do the same thing. The ECB had never done QE. Now they're doing it. In fact, I heard Mario Draghi say the other day, this you have to understand is not unusual circumstance. We will use the toolbox. It's now what we do. We do QE. It basically, and all of them say that. They basically, what was an extraordinary measure in 2009 is now part of the toolbox of highly accommodative monetary policy, as Janet Yellen once said. So they're all in this, the idea that somehow the United States is destined to collapse, the dollar collapse. The others are worse. And the others all support each other. There's no currency wars. They try to keep each other's currency in a range. Now, the other point you have to look at, that's monetary policy, is the fiscal policy. That's what the government spends. So take the United States in isolation. Absolutely, it's a mess. $21 trillion in debt. Unfunded liabilities, meaning the stuff that isn't included in the budget, but stuff like Medicaid and Social Security being the largest, the state pension funds, all underfunded. There's no way they can meet these obligations. They can only meet them by printing up the money and handing them out to the people as they retire, or cutting off their benefits and risk riots and things like that. But it's not like there's another country out there that has prudent fiscal policy. Look at Greece. Greece joined the EU and spent all their money. And that's why they had to put them on, quote, austerity. Greece was worse. You could retire at like 28 years old or something with full benefits the way they were eating off the trough there. China. There's like 1 billion Chinese. They all are going to need pensions. You think they have got all that money saved somewhere for them? Of course they don't. No one talks about unfunded Chinese liabilities. They're going to have to print that stuff. All of the fiscal policies are just as debt-driven and just as bad as the monetary policies. The only saving grace for Europe, which is what's probably going to cause it to split apart, is the European countries in the EU are obligated to run relatively prudent fiscal policies. So the ECB can run as reckless as they want. They can buy bonds. They can keep interest rate at zero. But the local countries in their own budgets are not allowed to really go reckless and just spend money, deficit spending. That's what Italy wants to do. They want to get out. They just want to print lira. That's what the complaint was in Greece. They're like, what? We can't keep this money. We can't do anything ourselves. And they have them on a tight leash. And they say, no, you can't. So that's where the problem is with Europe, is that all countries, all politicians, all central banks, what they want to do is spend money they don't have. Why? That's how you get elected. You can't promise people pain and suffering. Although in Russia, that's probably the one country. They don't really have a lot of debt. I think the people expect pain and suffering, and they had a horrendous time in World War II. The sacrifices of Russia in World War II are enormous. And then while Stalin was killing his own people, the Germans were killing millions of them. In fact, the Russians had a manpower, probably still do. I mean, that was an atrocious war. And but in any event, let's take a look more at what we got here. The Fed, full name, the Fed is creating, we're going to bring rates back down. Absolutely very astute. What they're doing is they're raising the rates so that when they get them to a certain point, and they realize that they have to lower them, they'll have room to lower them. And precisely at the point when they're ready to lower them, full name, that's when Japan, ECB, Bank of England will start threatening to raise theirs. And they'll just keep this central bank Ponzi scheme, fiat creation, conspiracy going because they're all working in relation to each other. Tom Manley, good evening, everyone. Well, you missed most of it, but good to have you. Please go back and catch up on what we discussed. I'd be happy to hear your comments. You can still comment on this live stream after it's been uploaded. You can still make your comments, and I will respond, but only in writing. Augusta Broker, GB has lost its control. It seems degenerate lords have lost it. Okay. DNA, sorry, disconnected. Just use the current price for Bitcoin for my question. RJN444. Okay, I'll ask. Yes, I'll get to the COMEX question in a second. Okay, so if the current price for Bitcoin, so if gold was $6,700, I think that would be a big impact, because right now I track the gold not just against the dollar, but against about 14 currencies. I track it against the Turkish lira, the euro, Argentine peso, the pound, the yen, Australian dollar, Canadian dollar. And what gold tells you when you see it literally skyrocketing against the peso and Argentine peso, the Turkish lira, the Venezuelan, it means that those currencies are doing very poorly. And when your currency is doing very poorly, it means that your country is screwed, because it means you have inflation in the country. It means other countries don't trust your currency. So if gold was at $6,700, that would mean that the United States dollar was screwed. However, I also believe that when the dollar is screwed, the emerging market companies are just gone. Countries, because they have so much dollar-denominated debt, including China. So basically, my view is that the United States dollar is the last man standing in all of this. No matter how bad it gets, they're going to make sure the rest of the world is even worse. And the rest of the world is going to make sure they have a vested interest in keeping the dollar system going, because keeping the dollar system going is keeping their fiat Ponzi scheme, debt credit creation driven conspiracy going. So they're not out to crush the dollar. That's nonsense. They don't want to crush the dollar unless they have something to replace it with, and they don't have anything to replace it with. China, the last thing it wants is a reserve currency status and has to be somewhat prudent in its credit creation. That's not going to happen. Everyone says they're going to have to do gold because they're going to want to bring back confidence. First of all, most people don't even think of gold as confidence unless you're over a certain age. And second of all, think of what happened in the last crisis. They didn't even talk about gold. There was no talk about, let's not let this happen again. Let's not have this type of credit creation Ponzi scheme that we had. Let's all go to, no one even was never even mentioned. That's why I don't understand why people expect somehow that's going to happen. All right, RJN444. I missed my question about COMEX. I've been following COMEX, and I wrote an article way back in 2013-14. I had done an examination of suspected manipulation and then actual examples of manipulation. And if you leave a comment in, if this is up posted, I'll link to it below. There's clearly examples, not even of there's a suspicion that's manipulation. I have plenty of examples where I actually did manipulate the gold price. I mean, just off the top of my head, they kept gold at $35 an ounce from 1934 to 1971. And then after they supposedly had the London gold pool in the 60s to try to keep gold. So they were always trying to manipulate the price of gold. Now, as to COMEX, it's obvious that it is manipulated. I don't know how you can even say it's not. In fact, it's not just that gold and silver are manipulated on the COMEX. All markets are manipulated. There are no free markets. When you look at just the idea that central banks set interest rates, that's a form of market manipulation. The idea that if they know that gold and silver are somehow proxies to the way they manipulate their currencies against each other, they don't want those to be outside of it. So here's what central banks do. If their currency is getting too strong, they'll sell their own currency into the market. That's manipulation. They'll do whatever they can to make sure that they're all coordinating so that there's confidence in the entire fiat system, not just their currency. So China will sell, China will buy, whatever it is, in order to keep their currencies in a range. And they'll also throw something at the gold and silver if they see gold and silver going too high. Turd Ferguson notes this all the time with silver. Every time it hits the 200-day moving average, boom, someone, we don't know who, executes some shorts, naked short selling. It's so easy to do. Silver's simple to do. There's not even, the market is tiny, and it doesn't cost much to do. And there's many places where it can come from, the Exchange Stabilization Fund. The idea is that the dollar needs to protect it. It's not just the dollar now, but the entire dollar-based or fiat-based, credit-based, global central bank credit system has to be protected. And they can't have they can't have gold going skyrocketing versus the currencies. They can't have people globally thinking that gold is worth more than the rupee, than the dollar, than the franc, than the yuan. They have to. All countries want. India hates gold. India is always trying to drive down the gold price, trying to stop imports into its country, trying to make its own people not want it, trying to get it back from them with this gold monetization nonsense where you turn your gold into the government, they give you a bond and they're going to pay you interest on it. All countries, all fiat currencies, countries that have fiat currencies, which is all countries, clearly don't want to see gold or silver rise. That's why that gold back yuan thing was complete nonsense. I didn't even have to even think about it, even think that China would want to back the yuan, or even gold exchangeable. Why would China want to hand over its gold? That would be an admission that the yuan was worthless and that they had to convert it in order for people to take it to gain any power in the oil market. So, yes, clearly COMEX is manipulated, but I don't know if it's ever gonna change. It's been manipulated ever since it came out. If you think about it, the United States citizens were not allowed to buy gold from 1933, when they were required to turn it in under Roosevelt's Executive Order 6102, May to 1933, until December 28, 1974. It was illegal to own gold bullion. Well, guess what year they started the COMEX futures? 1975. And the idea there was you bring on that exchange, and if people want to buy gold, they can do it that way. And if they could manipulate it, they could discourage people from hoarding it. Because if everybody actually thought, even 1, 10, 5, 3%, small percentage of people actually thought that gold and silver were worth far more than any type of fiat currencies, it would all get gobbled up. The demand would be so great that the price would have to rise. But that doesn't happen. Why? The other thing they came out with, which takes away the need to have to waste a lot of time and money on COMEX manipulation, are ETFs. You just create those, and people buy those, or they think they're buying gold, and you don't have to have the gold there. They say they have it there, but you never see it. So gold ETFs, silver ETFs help people, not help people. They actually hurt people. They encourage people to buy their gold and silver that way, as opposed to buying it in the physical form. And I've done charts on this, and I can link them too. The gold ETF demand is soaring, but the physical demand at the mints is down 80% since 2015. So clearly that's another way. And who runs ETFs? Banks, right? They're not run by, for the most part. So ETFs are another tool in their toolbox. Lewis, I'm not sure if you're aware of this, but you're actually making a strong case to own. Yes, I'm for precious metals. I absolutely. But what I am also is a realist. And what I'm saying is, when people say elites are losing control, bankers are desperate, well, they're not really. They have a very firm grasp on this RJ94444, much firmer than we say, because I've heard elites are losing control, bankers are desperate, game changer, game over, and it doesn't happen. Why? Because they have a firmer control on the markets today than they did back in 2008. Think about it. The United States stock market goes up in a straight line ever since then. Why? Because the Fed was pumping money into it, and they got other central banks to pump money into it. You have the CME Group, which is a quasi-governmental entity, offers foreign central banks a discount on futures, which they can use to manipulate the price of the the price of the stock market higher just by manipulating futures. So yes, the problem I have with the pump stories are it's a sense that somehow this thing is going to collapse, it's imminent, it's unsustainable, they're losing control. I see, unfortunately, and have been seeing for the last few years, a strengthening of control over these markets to the point where they're not markets. They're basically, they go where they want them. And it's not just the gold and silver market, it's the equity market, the bond markets. A lot of people say, well, no, you can't mess with the free market. Well, I like to use the analogy, you can if you own the market. So I like to say you don't beat the casino at the casino. The casino owner runs the table. You don't say, well, eventually he'll lose. No, eventually he'll continue winning. The only way you're going to get out of this, I think, is if people trade commodities, Bitcoin, gold, equities outside of exchanges where there's a true supply-demand dynamic. But right now, all of the major markets are not free markets. They are controlled markets. They are owned markets. Think about it. The Fed interferes and provides liquidity to the U.S. stock market. The Swiss National Bank buys stuff on the U.S. stock market. That's not a free market. The Swiss National Bank they buy Tesla. Why would they buy Tesla? It makes no sense for a prudent central bank to buy a company that doesn't earn a profit and doesn't pay a dividend. Yet they buy that stuff because they all want the paper products to go higher. They run the paper game. That's my point. And yes, it makes sense. If you're smart, you want to hold something that's tangible and so on. But they've convinced the world not to. All right. That's right, Tom. There's nothing wrong with owning PMs. Absolutely not. Where's Barry? Oh, wait. We got that already in paper gold. I don't know what that means. Oh, ultimate. Yeah, exactly. I didn't see your earlier comment. Ultimate idea. Yes, fiat gold and fractional reserve gold. That's exactly what they want. And that's when the COMEX contracts, if you can buy or sell more COMEX contracts that are either available in the vaults at any particular time, that's fiat trading. You're trading price. You might as well just have 1 ounce of gold or no ounces of gold in the contracts. Take away any ability to have delivery, or you can have the delivery, but you can say you can settle in dollars. They'd still trade there. The traders don't care. You know why? Because the traders aren't interested in gold. They're interested in fiat profit. And that is the key to why no one's ever going to stand for delivery, because they're not there to buy the gold. They're there to trade the paper profit. And if they ever did, and I wrote a long article on this called Why the COMEX Won't Collapse, if any trader decided they were going to stand for delivery and collapse the COMEX, they would be booted off the system. They'd have the IRS up there, whatever, and they would never be allowed back on the platform. So you can, again, beat the casino at the casino. You've all seen the movie Casino. Sure, you can go in, you can count cards. If they catch you, they will bring you in the back room and they will chop your fingers off. So the idea that these markets, people are going to stand for delivery, first of all, they're in there. They're not in there to buy gold. They're in there because they make what they think is money, which is dollars. They trade, they win, they trade, they lose. They don't want the gold any more than they want the pork bellies delivered on their front lawn. All right, if you know their game, says Tom, that's exactly why you buy it now while it's manipulated lower. RJN 4444. Well, you could have said that last year, the year before, the year before. The question is, it's almost, you put it down to hope, is that this is unsustainable, can't go on forever. You got a buying opportunity now. Thank them for manipulating. But you have to ask yourself the question, how long can it go on? And no one knows. And that's like asking a casino owner. And the casinos do go bust. That's a fact. But how long can they continue? I'm not optimistic that it stops tomorrow or next week or the next month. So we'll see where it goes. Database DNA. Weren't you making fun of silver pumpers for saying that if enough people buy silver, it puts pressure on the bankers? No, I've always said that if enough people bought silver, it would put pressure on the bankers. What I make fun of them for is actually believing it can happen. This hasn't even come close. The closest it came was in 2015 for silver, when the U.S. Mint and the Canadian Mint and other mints were selling a large amounts of silver to the point where silver coins, rounds, and bars were about 25% of the overall silver annual mining production. 10 years earlier, in 2005, I did a silver report on this. In 2005, it was only 5%. So it was coming to a point where the demand for industrial silver and investment silver was starting to get very tight. But it didn't last, and it went away. And silver investment demand has dropped about 80% since 2015. What I was opposed to or making fun of them was that somehow they thought that they could effectuate this change. And the reason it doesn't happen is, I've also done another story, and I've done a video on it, and I was on the Daily Coin with it, is I did the numbers, what would happen if 1% of the U.S. workforce invested in physical metal, and I went through charts if they invested X amount each month, small amounts. The problem is not 1% of the workforce does at all. And obviously, if it got to 5%, it would overwhelm, and that's only the United States. So globally, if 1% of the population of the workforce were to buy silver on a regular basis, it would be a big deal. But it's just not happening, and it's not going to happen. But thanks for the question, Database DNA. It's a good question to clarify. See, when I make fun of pumping, it's not because I don't believe in the underlying thesis of sound money. It's because I don't believe enough people believe in it. And I know enough people don't believe in it because the only people that believe in it are on this channel and a few other channels. It's not widespread. And you could say, well, they're idiots. They could be, but the world is made up with, you have to take the world as you find it. If 99% of the people are idiots, they're the ones who drive the value. Well, as long as there's some controlling people. So, for example, the bankers, if they can convince everybody that unbacked currency is good, they're going to go along with it. Look what happened when they changed over the quarters and the dimes and the half dollars in 1964 to 1965. They just flipped them over and said, okay, it's still worth a quarter. There's no silver in it, but there you go. It says a quarter on it, does it? Most of the population just said, yeah, sure. Yeah, some people started to pull the silver out, but it didn't have any impact. They never went back and changed it because of that. PMs are a long game and not a short game like paper trading. Well, that's true. That's true, Tom. Gus the Broken, what is your prospect when gambling on the market without inside information? I think the best inside information you can have, if you don't have inside information, that's been good advice. You do what the Fed wants you to do, and that sounds antithetical. But the point is, the Fed said, both Bernanke and Yellen, that they wanted to create a wealth effect. And the purpose of all the nonsense they were doing was to raise real estate prices and to raise stock prices. And they finally managed to get that done. And if you just listen to them, as much as you hate them, you would have done really well. Database DNA, clarification, buying silver, accumulating physical silver, reducing supply. That's right. That's how I was thinking of it. And it would have to be physical silver, not buying ETFs or buying COMEX contracts. People would actually have to buy and save in silver in not large amounts, but percentage amount. And it would have to be much more people buying much more commodities. And I'll tell you what would happen if that did happen. I didn't include this in my analysis. The governments would just ban you buying it. That's what would happen. They would just say you can't buy it anymore. It's illegal. You're wasting it. We need it for industry. And they're perfectly within their powers to do that. So even that wouldn't work. They basically made it so that as long as they're running, if they have the laws and they have the casinos and the stock markets and the exchanges, they control the price and the flow of commodities. That's why initially with Bitcoin, that's why they want to get their hands all over Bitcoin. That's why they want to get their hands all over, some people say they already have it, all over the exchanges. They don't want another asset out there going out of control that somehow bypasses what they do. Matthew Words, the world today runs on credit, not money. That's right. It's definitely credit driven. That's why the idea that China wants gold backed anything is not. China is the most credit driven. Empires start with money. That's right. And once the money is gone, credit is used. And once the credit is gone, the empire falls. That's true. Right now, it's a global empire. That's the problem. All the wealth in the world has been created. Today's wealth has been created as a result of debt. China's is all credit created. They subsidize those people to make the goods so they can sell them for cheaper. Then they borrow more money and they build more stuff and they sell more stuff. They go overseas, Belt and Road. That's not a sound economy either. Database DNA, thanks for the answer. They voted for Hillary. How long can it go on, asked Database DNA, as long as people don't understand the value of sound-backed dollars? That's my point, Database DNA. That's my point about why I mock the silver pumpers, because they give you false hope. When they say bankers are desperate, elite, or losing control, you gotta be kidding me. They're living large. They're not losing control. They're laughing. Every time the price hits the 200-day moving average, boom, down it goes silver. Trust the broken. Crypto is just a transfer mechanism. The metals have actual value in actual industrial units. Well, that's true. There's no denying that. Fiona Whalen, after Soviet Union collapsed and runaway inflation ensued, shortly after my mom's heirloom and few gold rubles helped us quite a bit to get through. It did make a shift. Yeah, you can't go wrong, Fiona, holding a physical asset. It's just that people are not working towards accumulating them. They have been dangled in front of their nose what they call riches, which are in the form of fiat currencies. And that's what people chase. That's what their salaries are paid in. That's what they pay their taxes in. That's what they buy their houses with, their mortgages. So you can say gold is money, period, and all that, but you don't use it. It's savings, yes. So that's where I am on all this. Thank you for all the questions. Unless there's any more questions, we've put in an hour. I want to thank everyone for joining me today. And please go back and listen if you missed any of it. And if you have any questions, I will respond either with a link or with an answer if I can help. Thank you very much.